Hey, hi friends. This is Deepak here, and I welcome you all to my channel NextGen MGS, where you will get motivation, success, and everything related to money, finance, and job related posting. Now, in today's video, we are going to discuss a very important key concept, that is how to become financially independent. I'm repeating, how to become financially independent. Now, we will understand this concept by a very popular theory that is called three pig theory. The what three pig theory says, there are three key concept or three key saving, or I will say three key important points which we have to everyone have to keep in mind to become financially independent. Now remember, this three big theory is not applicable for large scale businessman or someone who is already holding 20 crores, 30 crores, 40 crores, but this is applicable to about 98% of the Indian citizen who are a daily worker, who are a salaried worker, who are a corporate employee, etc., etc. Right. So let's quickly start and move to the key concept starting here. Now, as a person to become financially independent in your life, you have to focus on three things. See the below three things, that is building an emergency fund, taking health insurance for you, for your family, or for your parents, and taking term life insurance. Very important one, that is term life insurance. Why I will tell you why. I will tell you why term life insurance is one of the important one. Now moving on to the next and understanding slightly in detail. Now, first of all, understand what is an emergency fund. We all, as a job, corporate employee, or maybe a daily wage workers are there, or maybe about 98% of the employees or people of India, they are daily wage worker, or maybe private sector employees or unorganized sector employees, right? So a small emergency fund is very important for them. So emergency fund is nothing which it is a money which will help you out in case of any emergency in your family, for yourself or for your parents, right? So simple, emergency fund, you can, as the word suggests, emergency and fund, you just add it together, you will get, in case of urgency you will get the money, that is emergency fund. Now first one, for emergency fund you can put your money as a fixed deposit. Now what is fixed deposit? You are keeping your money for a shorter period of time, maybe 1 year, 2 year, 3 year, 4 year. This is how it is, shorter period of time, and in case of urgency you can break that FD, fixed deposit, and you can get that money. Fixed deposit, recurring deposit, both will work for you. Third one is mutual fund. Now remember one thing, if you are building an emergency fund, never keep your, or never invest your money into such mutual fund which has a lock-in period, maybe 2 years, 3 years, 5 years, whatever. Always invest your money into the mutual fund where there is no lock-in period, even there is no 3 months of lock-in period. There are a lot of mutual funds giving close to 20% return, 15% return, and they have no lock-in period, no exit ratio, or no exit loads. Right. So invest in those. Now, the next is general, one of the traditional way, that is keeping money in the saving bank account. Right. That's a very traditional, but this will give you hardly 3 or 3.5% of interest annually. Now, if I will talk about my favorite, I invest or I keep my emergency fund in mutual fund. I have divided it into 25, 25, and 50%. That is 50% of my emergency funds are into mutual fund, 50%, 25% are into the saving account, and rest 25% I have kept as a recurring deposit or fixed deposit, I can say. Right. This is what exactly my suggestion would be. Now, if I will talk about what should be the amount you should keep as an emergency fund, then it should be at least 5 to 6 times. I always say it should be plus, not minus. That is 6 plus months you can keep, but don't keep minus. So at least 6 months of your monthly expenses. For example, if my monthly expenses is 50,000 per month, 6 times of 50,000 is 3 lakhs. So your emergency fund should be somewhere around 3 lakhs plus, not less than that. See, you cannot build an emergency fund over the night, right? So that you have to plan and you have to build it over the period, right? This is how it will go on. Now, moving on to the next one, health insurance, one of the biggest demand and need of current situation and ask after COVID. Now, understand what is health insurance. Health insurance is a type of insurance where you will get health cover for your family, for your parents, for your kids, for yourself in case of any medical health emergencies. Right. I have seen lot of cases where people like they have saved 20 lakhs, 15 lakhs, 10 lakhs after working for almost like 5 years, 7 years. And because of a quick health emergency in their family or unfortunate health emergency in their family, they have lost all those 15, 20 lakhs, right? So this is how the medical expenses are now. It's highly and it's very, very costly. So what you should do, I understand a lot of people say, sir, I have a health cover of 5 lakhs, 10 lakhs from my organization or 3 lakhs from my organization. That is group health cover, right? Additionally, you should always have additional like 5 to 10 lakhs of health cover that will hardly cost you around 1000 or maybe close to 1100, right? But get a health policy for you, for your family, to cover your family, complete family. Now, I'm telling you a very quick calculation. Calculation is very simple. This is regarding this health insurance only. Now, I am taking example. Let I am taking a 10 lakhs of health insurance cover, right? For which I am paying 1000 per month. That is for 12 month. I am paying 12,000. That is yearly. For example, for the first year, it was of no use for you, and you thought that 12,000 has gone into vain. It's wasted for you. Second year also, you will pay 12,000. That is now 24,000. You will again think, oh, my 24,000 has gone into vain. There is no need of health policy. Why I have taken? But suddenly in the third year, there is some unfortunate situation in your family, medical emergency in your family, and someone, maybe your parents, your spouse, or anyone, got admitted to hospital, and the hospital bill cost around 4 lakhs, 3 lakhs. Even the minimum cost right now, if you are getting admitted to hospital, is somewhere around 1.5 to 2 lakhs. The average I'm talking about, right? So in the third year, your medical bill is somewhere around 2 lakhs or maybe 3 lakhs, right? And in the third year, you have additionally paid 12,000 more. So in total 3 years, you have paid 36,000. But in the third year, you have utilized 2 lakhs plus as a medical cover. So that is always an additive advantage. But what people think, first year it was of no use, second year it was of no use. Let's close it. There is no use of this. I'm wasting my money for this. But remember, this is a very simple calculation, guys. Now, moving on to the next topic, and one of the very, very important topic, that is term life insurance. Now, let me tell you one thing. What is term life insurance first? Term life insurance is insurance which where you will get your money in case of unfortunate death or some critical accident or something like that, right? So first of all, understand who needs a term life insurance. If your family, if your spouse is financially independent, you are holding 10, 20 crores in your life, there is no need of term life insurance for you. This is waste of money for you. Don't invest, don't go for term life insurance. But if your family is dependent on you, if you are earning in, maybe you don't have a saving of 10 lakhs, 10 crore, 5 crore, your family is 100% dependent on you, then 110% you will need a term life insurance. This is a backup plan in case of, see, if someone is passing away, we cannot stop that, but at least with the financial support we can support his or her family, right? So having a term life plan, minimum, 10 times to 15 times, I will say. I always say cover the highest portion. For example, if your earning is 10 lakhs, you should have a cover of at least 1.5 crore to 2 crore. That will cost around, I believe, like 1200 to 1500 per month. I understand. But that will make you safe and free minded that even if anything is happening, I am in the safer side, my family is in the safer side, and my children are in the safer side. So that is always important. Buy a term life insurance at least 12 to 15 times of your annual CTC. Now remember, there are a lot of companies, I can say, I will not take the name because it's not a promotional videos. So there are a lot of company where they give opportunities as a term life insurance that they will return your money at the end if everything is well at the end, right? You may invest into that, right? So, but take this, term life insurance is very, very important. Okay. So now I hope you have understand. See, saving money in mutual funds, stocks, Sukanya Yojana, a lot of there are investing the money, right? But to become independent in your family, financially independent, you should have three things. I'm repeating: emergency fund for you and for your family, a good health cover for you, for your family, and if your family is dependent, then a term life insurance of at least 12 to 15 times for you and your family. This will make you free minded to live, to work for yourself, for your family. I believe this video will help you out to understand more. If you have more query, concern, question, you can see my email ID on your screen. That is karjashikglobal@gmail.com. Feel free to write it to me if you want to connect me for any query, concern, if you want to ask me any question, if you want to discuss with me 101. You are free and you can put it in the comment box, and I will try my best to connect with you and will guide you. Thanks a lot for watching this video. Please like, share, and subscribe, and click the bell icon to get the latest video related to the financial topics and career and jobs. Till then, Jai Hind, Jai Bharat. Thank you. Thanks a lot, guys. See you in the next video.